Have you noticed the Indian rupee note carefully? On the note, the Reserve Bank of India is imprinted, and somewhere in the center, it is written, "I promise to pay the bearer the sum of," as per the denomination of the note. Have you thought about why it's written or read about the organization mentioned on the note? The Reserve Bank of India is India's central bank and is also the regulatory body responsible for the regulation of Indian banks and other non-banking financial institutions. As we will see later in this video, it has multiple functions relating to the economy, including regulating interest rates, managing foreign exchange reserves, keeping the inflation in check, and many others. While the elected government of the day appoints the RBI governor for a particular tenure, RBI as an organization is independent of the government and may have a divergent view than the government. In many such cases, it is the RBI view which may prevail. It is one of the important pillars of the Indian economy. Welcome to India Business Insights. Today, we will discuss one of the most important organizations in India, which plays an integral part in India's economic system. Yes, this is the Reserve Bank of India, or RBI. Before we dive into its fascinating journey, do like, share, and subscribe to our channel for the latest updates. Let us now look at the history of the RBI. The seeds of the establishment were sowed with the recommendation of the Hilton Young Commission, or the Royal Commission on Indian Currency and Finance, set up by the British in the 1920s. Upon the recommendation, the organization gained statutory status with the passage of the Reserve Bank of India Act 1934. This led to the establishment of the RBI on 1st April 1935. RBI did not start as a government-owned bank, but was privately owned. It started with a share capital of Rs 5 crore, divided into shares of Rs 100, each fully paid up. In the beginning, the entire capital was owned by private shareholders. Out of this, Rs 5 crore, the amount of Rs 4 crore 9,78,000 was subscribed by the private shareholders, while Rs 2,20,000 was subscribed by the central government. The central office of the Reserve Bank was established in Kolkata but permanently moved to Mumbai in 1937. Prior to the establishment of RBI, all the functions of a central bank were being done by the Imperial Bank of India. The Imperial Bank of India was established in 1921 with the passage of the Imperial Bank of India Act 1920, which amalgamated 3 presidency banks into one strong bank. This later became the State Bank of India. We have done a full-length video on the State Bank of India. Please find the link in the description box. It's interesting to note that the Reserve Bank of India was based on the strategies formulated by Dr. Ambedkar in his book named The Problem of the Rupee, Its Origin and Its Solution. As time proceeded, the government assumed full ownership of the bank through nationalization in 1949. Let us have a look at the preamble of the RBI. The preamble of the Reserve Bank of India describes the basic functions of the Reserve Bank as to regulate the issue of banknotes and keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit system of the country to its advantage. To have a modern monetary policy framework to meet the challenge of an increasingly complex economy. To maintain price stability while keeping in mind the objective of growth. Some of the major events surrounding the RBI. In 1938, the RBI issued the first note. Before 11th March 1940, the accounting year was considered as January-December, but this was changed to July to June. In 1940, the silver rupee was replaced by the quaternary alloy rupee, and in the same year, the 1 rupee note was reintroduced. It needs to be noted that the note had the status of a rupee coin and represented the introduction of official fiat money in India. For the first time, security threads were introduced in 1944 on rupee notes. This decision was taken to ensure the security of the note. demonetization of high denomination banknotes of rupees 500, rupees 1000 and rupees 10,000 on 12th January 1946. This was done to curb unaccounted money. The currency offices at Calcutta, Bombay, Madras, Rangoon, Karachi, Lahore, Kanpur became branches of the issue department. Offices of the banking department were established in Calcutta, Bombay, Madras, Delhi and Rangoon. Burma in Myanmar seceded from the Indian Union in 1937, but the bank continued to act as the central bank for Burma till the Japanese occupation of Burma and later up to April 1947. After the partition of India, the Reserve Bank served as the Central Bank of Pakistan till June 1948, when the State Bank of Pakistan commenced operations. Organizational structure of the RBI. In the pyramid diagram above, you can see that there is the Central Board of Directors. This is the primary authority and has the responsibility for the supervision of the Reserve Bank. It entrusts specific functions to the local boards and various committees. The governor of the RBI is the bank's chief executive. Supervising and directing the affairs and business of the RBI rests with its governor. Along with the governor, there are deputy governors and executive directors. The central government nominates 14 directors on the central board, including one director each from the 4 local boards. The government also nominates 2 government officials as director representing the government, who are usually the finance secretary to the Government of India and remains on the board during the pleasure of the central government. The Reserve Bank governor and a maximum of 4 deputy governors are also ex officio directors on the central board. RBI has 4 zonal offices. These are New Delhi for North, Chennai for South, Kolkata for East and Mumbai for West. Apart from this, it has 19 regional offices and 11 sub-offices at present. Capacity building is an important component of any organization, and RBI is no different. It has 2 training colleges for its officers. First one, Reserve Bank Staff College at Chennai, and second one, College of Agricultural Banking at Pune. The first governor of the RBI was Sir Osborne Smith, and the first Indian governor was C.D. Deshmukh. It is noteworthy to know that RBI also has its first woman deputy governor, K.J. Udeshi. Further, former Prime Minister and renowned economist Dr. Manmohan Singh also held the strings of this prestigious institution as governor, thereby becoming the only PM to have held the post. Presently, Shantikanta Das is the governor on the post. He is also the 25th governor of the RBI. The key functions of the RBI. First, issuer of currency. Section 22 of the RBI Act 1934 gives the bank the right to issue the currency. Before 1935, the Government of India was responsible for printing the currency notes. Second, supervision and regulation of banking and non-banking financial institutions. For banks, RBI derives their powers from the Banking Regulation Act 1949, while the other entities it is under the provisions of the Reserve Bank of India Act. Third, monetary policy. These are actions that RBI takes to determine the size and growth of the money supply, which in turn affects the interest rates. Modifying the interest rate, repo, reverse repo, bank rate, buying or selling government bonds, OMOs, and changing the amount of money banks are required to keep in the vault, such as CRR and SLR. All the above 3 methods are conventional tools of monetary policy. In recent years, conventional monetary policy has become more common. This category includes quantitative easing, which means the purchase of varying financial assets from commercial banks. In the US, the Fed loaded its balance sheet with trillions of dollars in treasury notes and mortgage-backed securities between 2008 and 2013. The Bank of England, ECB, and Bank of Japan have pursued similar policies. Fourth function, leader of the last resort. This means that the RBI is the rescuer of banks facing temporary liquidity problems but haven't gone bankrupt. The central bank provides this facility to protect the interests of depositors and prevent possible bank failure. Fifth, central and state government's debt manager. To minimize the cost of borrowing and smoothen the debt structure, RBI is the manager of public debt and also issues loans on behalf of the central government and state governments. Sixth, Bankers' Bank. The RBI is the common bank for all the banks as it settles interbank fund transfers. Banks open their current account with the RBI to maintain SLR and CRR. For special needs or purposes, RBI provides short-term loans and advances to banks. Seventh, Forex Reserve Management. The RBI is the custodian and manager of forex reserves. It is vested with the responsibility of managing its investment as well. Its importance has grown due to the increased share of foreign currency assets in the balance sheet of the RBI and the challenge of reasonable returns and preserving the value of reserves in the face of increasing volatility in exchange and interest rates in the global market. The foreign exchange reserves include foreign currency assets (FCA), special drawing rights (SDRs), gold and reserve tranche position. Eighth function, developmental work. Building financial infrastructure, ensuring credit to the productive sectors of the economy, and expanding access to affordable financial systems are the developmental works of the RBI. One of its major components is priority sector lending. Priority sectors are those sectors which lag behind due to insufficient and timely credit facilities. These include agriculture, small, medium enterprises, export education, housing, social infrastructure, renewable energy, others, and weaker sections. Ninth, research. Research undertaken by RBI focuses on issues and problems arising at the national and international levels that impact the Indian economy. India is a signatory of Special Data Dissemination Standards, as defined by the IMF for the purpose of releasing data. Under the RBI Act 1934, the bank is legally obligated to publish 2 reports every year. One is the annual report and the other is the report on trends and progress of banking in India. Along with this, RBI conducts Consumer Confidence Survey and Inflation Expectation Survey on a quarterly basis. RBI discharges some of its functions through certain committees, which have an institutionalized structure. Some of the most important of these are Board for Financial Inclusion, or BFS. BFS was formed in November 1994 as a committee of the central bank. Its task was to undertake integrated supervision of different sectors of the financial system. Entities in this sector include banks, financial institutions, and non-banking financial companies, including primary dealers. Since the RBI is the regulator for all these entities, a need for a separate entity was felt. Keeping this in mind, the RBI constituted a separate unit for supervision, which is the Board for Financial Supervision. The Reserve Bank Governor is the chairman of the BFS, and the deputy governors are the ex officio members. The board plays an important role in RBI's regulatory and supervisory responsibilities. The objective behind this is to ensure that the banking system remains stable and healthy. The BFS was initially given the mandate for the supervision of commercial banks, financial institutions, and NBFCs. Later, urban cooperative banks or UCBs and primary dealers were also brought under the purview of the BFS. Since its formation, the BFS, which meets every month, conducts on-site supervision of banks and off-site monitoring based on a quarterly reporting system. These on-site inspections are based on a framework devised in 1995, which is CAMELS. capital adequacy, asset quality, management, earning, liquidity, and sensitivity to market risk model. This is used for domestic banks. Foreign banks are evaluated on the CALCS model, which is capital adequacy, assets quality, liquidity, compliance, and systems. Board for Regulation and Supervision of Payment and Settlement Systems, or BPSS. This board provides direction for policy initiatives on payment and settlement systems within the country. Its chairman is the governor. This board also lays down policies for regulation and supervision of the payment and settlement systems, sets standards for existing and future systems, authorizes such systems, and lays down criteria for their membership. In India, the payment and settlement systems are regulated by the Payment and Settlement Systems Act 2007, which was legislated in December 2007. While we cover each of the important functions of the RBI in more detail in subsequent videos, we will talk in some detail about the Monetary Policy Committee of the RBI. In the past year or so, this function of the central banks of major countries has become extremely important in containing inflation as well as create an environment for growth. The Monetary Policy Committee is headed by the Governor RBI and has the responsibility of fixing the benchmark interest rate or the repo rate to contain inflation. The MPC replaces the old system where the RBI Governor fixed interest rates with the aid and advice of his team and Technical Advisory Committee, which had complete control over the monetary policy decisions. A committee-based approach will add a lot of value and transparency to monetary policy decisions. Further, RBI is mandated to publish a monetary policy report every 2 months, explaining the sources of inflation and the forecasts of inflation for the coming period of 6 to 18 months. The Constitution of MPC. The central government constitutes the MPC through a notification in the Official Gazette. The MPC has 6 members: the RBI Governor, which is the chairperson, the RBI Deputy Governor in charge of monetary policy, one official nominated by the RBI, and the remaining 3 members represent the Government of India. The Government of India nominees are appointed by the central government based on the recommendations of a search-cum-selection committee consisting of the Cabinet Secretary, the chairperson, the RBI Governor, the Secretary of the Department of Economic Affairs, the Ministry of Finance, and 3 experts in the field of economics or banking as nominated by the central government. The central government nominees will hold office for a period of 4 years and will not be eligible for reappointment. We cover the deliberation of the MPC and their decisions in detail in our monthly updates on the Indian economy. The links to our recent monthly economic updates are in the description box. In conclusion, the RBI is one of the most important institutions for the management of the Indian economy. It plays various roles in order to ensure India's financial and economic health. With changing world and economic conditions, the RBI has been successful in molding itself and making the institution more accountable and transparent in its operations. Thanks for watching. We encourage you to support our content so that you get informative content with just a click. See you in the next video.